let's talk more about those movements. We've got Wayne Mccurrie from FNB Wealth and Investments. Thank you, as always, Wayne, for joining us. Not a great start to the week for the JSE and for resources and the like. And I'm wondering, I suppose some of it has got to do with the jobs data that came through from the United States. But are there any other catalysts, including perhaps what we're seeing with Transnet?
Look, I mean, let's deal with Transnet first. Transnet has been a problem for the South African export industry literally as long as I can remember, at least the last 20 years. And in the previous boom we had, let's say from 2004 to 2008, we also lost out on a significant amount of exports because of Transnet being unable to handle the volumes. So this is not new. The strike itself, I mean, at the end of the day, it will be a relatively small impact on the share price because, you know, the share price doesn't just take into account the next 2 or 3 months. It takes into account a lot longer view than that. But clearly, it's not good news. So more importantly is we've got to sort Transnet out, let alone don't worry about the strike. We've got to get Transnet operating efficiently and the equipment working and the network working, because then we can export significantly more. And I think steps are being taken within Transnet to actually sort it out, because quite frankly, it's desperate. I mean, the state of Transnet and the infrastructure, you know, not exaggerating when he's saying it's on the point of collapse, because it truly is. So strikes happen. It's quite normal. It's not that unusual, and we will get over it, and all the parties will find settlement, because we always do. So that doesn't worry me too much. But the market is weak because of the US jobs data. Now, surprisingly enough, the jobs data was good. But that's bad for the share market, because if it's good, it means there's more inflationary pressures, which means interest rates will go up more, which means the stock market will go down. And over the weekend on Friday, the US market was very weak. And today it's also down roughly at 1%. And we're just following that like the rest of the world.
And I see that it's probably filtering through to the rand, which was at around 18.16. It has backtracked from those levels a little bit. The price of Brent crude as well. Just your short to medium term outlook on those, and just given what you've mentioned about the jobs data, there are a lot of other factors that we are seeing geopolitically that could have an impact.
Well, look, we all know about the war. We all know about the rising gas prices. But that'll all come to an end in the not too distant future. I mean, Russia cannot sustain this war economically, no matter how much cheap oil they sell to India and China. So their economy cannot withstand this, let alone a military victory also seems to be not in their grasp at the moment, given all the other factors. But way more important than that is inflation and interest rates worldwide. Now, it's very likely that inflation will fall strongly, I mean, really strongly in the second half of next year. So also this high inflation is not going to be with us forever. But in the interim, markets don't like it. They don't like high interest rates. I mean, up until a year ago, we had virtually no inflation and interest rates were at abnormally low levels. I mean, 50, 60-year low levels, and the share market loves that. So this transition to higher inflation will, of course, be negative for the share markets. On the rand, I mean, the rand's just following every other currency against the dominant dollar. So although we're weaker today against the dollar, we hardly changed against the pound and the euro. So this is all a dollar story. Unfortunately, we're going to have a weaker rand for probably another year, but then the rand should strengthen and actually strengthen quite nicely. So sometime in 23, beginning of 24, we could see the rand back below 16. And oil price, I think, is going down no matter what OPEC does, because global demand is going to start to fall in a global slowdown and maybe even a global recession. So I think we'll see the oil price before the end of the year in the 80s, if not the 70s, let alone going up higher. You know, OPEC can cut production, but ultimately demand determines the price of oil.
And then some company updates. One to note was Kumba Iron Ore today, Wayne. They're kind of counting the cost of what's going to happen with the strike, but all the other inefficiencies that you alluded to earlier, saying that export sales are going to be impacted quite a bit, and ultimately that affects our tax revenue as a country. We lose out on that tax that we could have gotten.
Yes. Look, I mean, every day that Kumba doesn't transport iron ore, is about 200 million rands a day worth of sales. Now, of course, there's expenses against that, and also understand whenever you get a situation like this, the effect of the strike is normally exaggerated because people want to make a point. I mean, there will be some catch up, they will get a little bit more volume through, but I suppose just to come back to the inefficiencies of Transnet, both Thungela and Kumba say that because even under normal circumstances, they can't get enough coal and enough iron ore to the ports, that the stockpiles at their factories, at the actual mines, are incredibly high. So, if the strike carries on, they can only carry on mining for about now, probably another 5 days, before they can't store any more coal or any more iron ore at their actual mines. And then they'll stop production. And of course, if the ships can't get in and out of the harbor because of Transnet strikes, then that stockpile is just going to sit at the harbor, and then you lose the actual sales. But as I said, there is some catch-up that will happen. I think there will still be some deliveries, some ships coming into the ports and some sales of iron ore, but clearly it's not good news. And, as I mentioned earlier on, Transnet's such a disaster that the government's been forced to actually get private sector involvement, and Thungela and Kumba will be right up there, with the involvement in Transnet to try and get this to work properly, because the whole country benefits if it works properly.
Yeah, Wayne, as always, thank you so much for your time this evening. That is Wayne Mccurrie from FNB Wealth and Investments. And that is it for your business bulletin for now. Anli, we'll be back in the next bulletin. We're going to be hearing from the unions about what exactly it is they want from Transnet.